Hello, everyone. It's John O'Hare from O'Hare Wealth Management with our weekly update. Uh, this is coming out to you on September 11th. Packers are playing that night. It's should be a good game. But we're going to talk about the question for the week. Before we do that, I want to remind you that if you do have questions, you can send them to our service address at service@o'harewealth.com, or you can text them to our number below, 414-644-0060. Let's see what our question of the week is. Will lowering interest rates help the economy? And this is a question we're getting a lot because we're anticipating, like everyone, that the Federal Reserve will lower interest rates for the first time starting next week. I think the date is the 17th, the Fed meets. There's even some speculation they might lower it 50 basis points. Usually they just do a quarter point, but they might do a half because of the very weak employment data we've seen over the last 3 months. So most of the betting markets or futures markets see a 99% chance of a cut in September. And much of them see a cut coming in December again for sure, and even possibly in October. Any way you look at it, we're looking at probably a half a point to a full percentage points in cuts over the next 6 months. So the question is, will that help the economy? And the answer, unfortunately, is sort of maybe. And let me show you the graph of the Fed funds rate. This is the Fed funds rates going back 65 years. And I want you to notice, in this graph, it goes back to the 70s when I grew up and inflation was crazy. But more important, you notice there is a gray line bar graph in there. That's when we had recessions. And if you look closely, you'll notice that interest rates came down or were lowered by the Fed when the economy slowed significantly. So sometimes we say, be careful what you wish for. If the Fed is aggressively lowering rates, that means we're probably having a severe economic slowdown. Now, there have been times like the mid-2000s and the early 90s where they lowered rates and we did have a recession. And that's sort of our base case right now. And they haven't had to lower rates for a while because the economy has been very strong. So 50 to 100 basis point cut, or half a point to 1% over the next 6 months seems very reasonable. Will it help the economy? That's where the jury's a little bit out. And we've got in our newsletter this week the comments from Dr. Kelly. Dr. Kelly is with JP Morgan Asset Management. And for those of you who've been with us for a long time, we use his stuff, read his stuff all the time. I think he does an excellent job. And if you can read that one this week, I think it'll help bring home the point. What he points out in there is that the initial decline in interest rates will actually take money out of the consumer's pockets. His estimates is we're going to lose about 140 billion of interest. Again, if interest rates go down, the CDs will pay lower rates, the money markets will pay lower rates. And we have trillions of dollars in those type of accounts. We're going to earn less interest. Also, interest rates will come down on some debt, like auto loans, maybe a little bit with credit cards. It won't mean much of anything for mortgages because most people have a fixed rate mortgage already, so their mortgage rates will not change. Per Dr. Kelly's estimate, there might be as much as 30 billion in savings from lower interest. But again, there'll be 140 billion in lost interest. So the net effect is consumers will have a little less money in their pocket. And the reason for this is, unlike 50 years ago, 60, 70 years ago, we don't have a very interest rate sensitive economy anymore. The only area that's very interest rate sensitive anymore is housing, and housing is less than 4% of the economy. We used to have a lot of manufacturing that was very sensitive to changes in interest rates. it just isn't as important as it used to be. So it doesn't really get people to run out and borrow. In fact, borrowing rates have been relatively low to begin with, and the the companies have been taking advantage of that and issuing a lot of new bonds in the last year. The other thing that will happen here is the expectations for more rates as the Federal Reserve lowers rates the first time and the second. A lot of strategists and economists are going to say, what does the Fed know that we don't? Maybe, maybe things are worse than we thought. So it can make you hesitate while you wait to find out what the Fed knows about the economy. Also, some of the borrowing, since the Fed just started, some people might wait till the Fed is finished lowering rates before they go out and borrow. So um, the net argument here that Dr. Kelly made very well in this article is that it'll have a minor effect, maybe slightly negative. It's still good long term for the economy to have rates lower. It'll be good. It'll save the government a lot on their interest debt because the government borrows a lot in short term rates. So lower rates will help them, and that'll help their balance sheet a little bit. But as far as really jacking up the economy, it's not going to do a lot. And the Fed still is going to watch the inflation numbers, which should be coming out as this video is released. And inflation has been stubborn for going down. So the Federal Reserve might cut 50 or 100 basis points, then sit for a while again. So will it help the economy over time? Probably yes. Short term, probably no. It actually hurts a little bit. But I hope that helps. We look forward to having more of your questions. Jumping to our book this month. We haven't done a video on this yet, but we should do it. This is called Americana. I read this book 3-4 years ago. It's an excellent history of American capitalism or American business. And this gentleman did a fantastic job of going back to the beginning of our country 400 years ago. The first settlements, like the Virginia Company that settled Virginia, and talks about how there wasn't a bunch of gold and silver in North America, so these places struggled to get going. It was with the introduction of tobacco. They actually had something they could sell and make money on. But he takes us from that all the way to the dot-com period currently. Talks about things like cotton and how big an impact the cotton industry had on the United States. Talks about the Industrial Revolution. Talks about railroads. Talks about everything to Coca-Cola and movies and TV. It's really a nice read, something everybody should go through. Enjoyed the book. I might reread this one. With that, we're going to thank you for joining us today and hope to hear from you soon.